Let's take a look at the S&P 500 as we get ready to trade May week 2, 2021. Starting off with a look at the intraday chart, put in a really big initial balance range, which pretty much encompassed the entire day. We started off with a little gap up open in the pre-market on the heels of a new all-time high that had been put in on ES before the non-farm payrolls report, and then an even bigger one after the non-farm payrolls report, which came in much weaker than expected. So the market rallied perversely on that, thinking that, well, this really does mean that the Fed doesn't have to raise for quite some time. So we gapped up open, but immediately filled that gap in, which I find bullish as long as it holds, which it did. Our close on Thursday was 42.0162, and our low on Friday, set in the first 5 minutes, was 42.0164. Then we just rallied on up, set our initial balance high, pulled back off of that and into the European close, set what would be our final high for the day and a new all-time high at 42.3804. We pulled back off of that, tried to make another breakout at the end of the day, but couldn't quite get there. There was clearly a seller. It just felt like there was somebody literally pressing down every time we tried to rally up. Somebody was short 42.40 to 42.35 in the calls for Friday expiration, and everybody gave up, and at the end of the day we closed below that 42.35 strike. Still held a nice strong all-time closing high and weekly all-time closing high at 42.3260. Now our last weekly all-time closing high took us about 3 weeks to take out, so this will be an important level. Even if we take it out and make a new closing high on Monday or Tuesday or any point next week, this level will still be important to us, because when it gets to be Friday again, we'll be looking to close the week above here or failing to do it. So that's a good level to keep an eye on. As we look at the roadmap here, you can see everything that happened last week. Here was Monday. Monday was a gap up open, the first trading day of May, a rally, but then everybody and their mother just sold that rally. This is not the kind of candle you want to see. They call this a gravestone doji, this candle. Then what happens here is that you have this long tail on the top of the candle, which shows that everybody was selling. And we closed the candle just barely green on the day, but giving back all of the day's gains. And then that led to a gap down open the following day. Tuesday, we gapped down open right on the 10-day simple moving average. The last time we had come in contact with it was on Friday of the week before. This was our final trading day of April here. And so we kind of gapped down open right on the 10-day, sold off, broke the 20-day, and more than doubled the day down. But that's because we were headed towards this support area that I gave you last weekend. I told you to look for, if the 20-day simple moving average were to break, told you to look for a test of this 41.18, and if we do hold it, we absolutely must also close above this 41.34 handle. Well, sure enough, we broke down. We held about 10 points above that support level. We held at 41.2859, and we reversed and closed well off of the low. And then on Wednesday, we came in and sort of traded this compressed range, tried to break out over the 10-day, but that failed. But we held our low of the day right on the 20-day. And then, of course, on Thursday, took a big look below the 20-day, but rallied back up. And as soon as we rallied back above that 20-day, the rest of the day was just incredible. It was like a triple up move from the low to the 20-day, to the 10-day, to the top of the range on the day. Big range day, pretty much about the same range as we traded to the downside on Tuesday. So for the downside, I think we can clearly see that this 41.28 here, this 41.18 here, and these holds above this level back here, going all the way back to the beginning of April, is showing us a really good area of support. As long as we don't break down below this, and if we do, as long as we don't close below this 41.3494 level, we're still going to continue on higher. It'll be a break of trend when we finally do close below this 41.34 handle. On to Thursday and Friday. Here we had the rally, followed by the rally on Friday that we just went over. And here you can see here was the gap up open and the immediate push down to fill in anything going on with the gap here, and then rally on out. Our next level above us, if we are going to continue to rally into early next week, will be 42.44 at the 13% mark. This was our 12% mark here at 42.07, and you can see what a great level this was to judge progress or lack thereof. You can see here it wasn't a new all-time high, but a failure to move it over the 12% mark, and then our all-time high that stuck with us for a little over a week. Closed above this 12% mark, but then the next day was a gap down open, and the next day after that was a look above it and fail, and it took us until this gap up open on Friday, and one more little look below it before we could reverse and hold it. So this 4207 becomes a very important line in the sand for us. If we have an inside day on Monday, I've got to mark this level on here, but our halfway back of Friday's range was 4219.84. So as long as we hold above the halfway back of Friday's range, or make no more than a little dip below it, and we stay in the upper half of Friday's range, that's a bullish inside day. If we break down below that 4220 to 4219 area and we start trading in the lower half, that's not as good. But as long as we do hold above this 4207 on a closing basis, I think we're good to go to continue higher, and we can build a new trend off of this level. If we have a nasty day on Monday and start giving back some of this rally, then we're probably going to be playing through the 80 handle rule. If we break 4200, we're naturally going to gravitate back towards 4180. 4183 and change is the halfway back of the week we just traded. Here is the 20-day rising up to just below it, and here's the 10-day, which is going to be pretty strong, up in the around 41.95 or so, 41.95.96 on Monday's open. If we were to sell off down towards it, it'll press down a little lower, but still you're going to have these two simple moving averages and this halfway back on last week's range to really offer some support here. And then, of course, we'll be back below the 12% mark again, so maybe this would end up looking like one big failure. But I really wouldn't put too much emphasis on it, because really what's going to be going on next week is that we have the CPI data coming our way on Wednesday, and maybe we are kind of we've put on a little bit of rally, and we've got to absorb it and kind of sit sideways until we see that CPI data. If we make a little bit of a new all-time high, then fine, that makes this range even stronger, and then that moves up our support and line in the sand even more strongly to this 4207. Because if we can put in a few closes above this 4207 mark, that's going to be a really good strong line of support for us. And pretty soon this 10-day is going to rise through that level, barring any big sell-offs. You can see that when we started selling here, we started getting some bends in the 10-day simple moving average line. So as long as we stay somewhat flat to higher, this 10-day simple moving average is going to continue to rise. And maybe if it rises above this 4207 before we can break it, it's going to fuel us from underneath and get us even higher. Okay, so that's that. If we are going to head up higher than that 4244 level on Monday or Tuesday or at any point next week, if we're going to rise above that 13% mark, there's really nothing stopping us until we get to the median line of the bull fork. As I've shown you always, this is where all of our highs eventually gravitate to. This line is going to be at 42.86 on Monday. So if we can break up through that 13% mark at 42.44, we're going to go on another round of the 80 handle rule through 42.50 to 55, 42.60 to 65, and then finally arriving at 42.80. On Monday, that's where this median line will be. The median line will be in the 42.90s by Tuesday. And by Wednesday or Thursday, it's going to actually be rising through 4,300. Off in the distance, we have a measured move target at 43.26. That's times 2 up the Q1 range. And also the 15% mark on the year at 43.1950. So some food for thought on all of that. Okay, that's it. I hope this video helped you out, gave you a good idea of where we're at and where we're going to be going next. Happy Mother's Day to all the mothers, all the women who are part of this group and this private account. Happy Mother's Day to you, and happy Mother's Day to all of our moms. Moms are the best. As always, good luck and good trading.